Now, we have a real special surprise for you. What happens today, folks? Well, guess what? We had the Mr. Beeks coming in. The grain report was coming in this morning. And when the grain report comes in, who do we have? We have our man, Sal Gilbertie. Sal is the CEO, president of Teucrium Funds. Now, Teucrium Funds, folks, okay, the spelling is Teucrium. If you go to teucrium.com, what you're going to see there is this. You're going to see that they have a corn fund, soybean, wheat, sugar, and then they have a tags fund. The tags fund has all of those commodities in it. You talk about a little action out here today. Bottom line, we've been talking grains quite a bit. Corn. I know that accent of mine is wicked, folks, but our man, Mr. Sal Gilbertie, we are going to be talking grains right now. Sal, welcome back to TFNN.
Tom, great to be here. You're in a good way today. Very exciting.
Well, you know what? You know it's amazing. Okay, and you know this better than anyone. But it's great having you on, all the time. But on the grain report, it's huge. But there's been so many people looking at grains because grains have got hammered. And it was interesting this morning. So I was watching the grain report come out, and it had plenty of corn coming out. But I guess the excess rain, it said that, hey, man, and corn just took off topside.
Well, it actually did, and actually on the corn fund and the soybean fund, and they kind of go together because they share acreage, if you will.
Okay.
It looked like they had technical outside days today. So we had lower lows than yesterday, higher highs than yesterday, and it looks like since grain futures are closed, so they won't move much in price between now and the New York Stock Exchange close, but it looks like they're going to have an outside day closing above yesterday's range. And the reason I think that we're seeing that kind of technical strengthening is because there's an actual fundamental strengthening due to the ag report today, as you said. The biggest, I think, impact and mover for corn was that they lowered ending stocks almost 7%, 6.9% ending stocks are down. And so that means the amount of corn, since any agricultural product is harvested all at once, and then you live off of the stockpiles until you plant more seeds in the ground and they grow and you harvest again. The estimate that after we finished harvesting this year's crop, we're going to have about almost 1.6 billion bushels excess.
Okay.
And so we can live off of that. Now, the key part is that the last time we had stocks that high was 1.7 billion, all the way back in the 9-10 crop year, and I'm looking at my data here, but at that time, in that year, in the United States, we used about 13 billion bushels of grain, 13.055 billion to be exact.
Yes.
This year, we're projected to use 13.755 billion, so 700 million more bushels of grain. Since the 9-10 season. What happens is, as we've spoken about in the past, you have a growing global population. You have corn being used in more things. You have a lot more people requiring grain, requiring meat, and meat, of course, requires grain. Animals require grain for food. So we have really strengthening demand, very steady across the years here, and the shock to people, we didn't lower the yield that much. I mean, we dropped the yield to 167.5 bushels. 6.8, it's not that low, but you know what? There's a lot of usage out here.
Can you stay with us for 2 minutes? Just
we'll do
a quick commercial break. And folks, if you check it out, CORN, it's CORN on the NYSE. You're going to see it. It's wide price spread, accelerated volume. Sal and I are coming right back, folks. You stay right there. Welcome back, folks. Guest today is Sal Gilbertie. Sal is the president of Teucrium Funds. You can go check it out, Teucrium Funds, folks, by coming over to the website, teucrium.com. And as you go over there, what you're going to see is this. We know that the commodities, they trade in the futures market, folks, but what has happened, in the last 5 to 7 years, you can trade these in the equity market. You can diversify your portfolio. Corn trades on the NYSE under CORN. You have sugar under CANE. You got wheat under WEAT, and soybeans under SOYB. And if you want to put them all together, folks, you can get tags. TAGS has all 4 of them in it. Sal, you just brought up something really intriguing because the whole world right now seems to be focusing on China. China's been going Well, it hasn't been growing as much as the the world has thought they were going to grow. And I can understand the context, and this kind of just reminded me of when you actually brought it up, that, not using enough copper, iron ore, and all that, but people are going to eat. And realistically, in China, they're going up the food chain.
That's exactly right. In fact, I just want to correct myself what I said earlier. The wheat fund had an outside day along with corn. Soybeans did not have an outside day. So corn and wheat are the ones with the outside.
Oh, you get some action in both of them, big time.
Yeah, they really did.
Yeah.
But back to China, what happens is, sorry, we have some phones ringing here.
That's all right. I'm sure it's people that want to buy that corn fund. They're asking questions.
Well, they ask questions. It's good. Yeah, it's good. So what happens is that we have an emerging middle class. And in the emerging markets, what happens is a little bit of affluence comes to those people.
Yes.
I believe the World Bank says that over 1,200,000,000 people will enter what they classify as the middle class between now and 2020,
right,
which is 5 short years away. And what that means is they're going to increase the protein intake in their diet, generally through meat. And the number one use of grains in the world is for animal feed. And so when China or any other emerging country with emerging wealth, they don't even have to have a growing population, but they all do, it so happens, that really puts a bigger demand on grain, a very steady, almost inelastic demand on grain. And as we've spoken about before, the grain markets are supply driven, which is of course why today's very slight downward revision in yields in the United States caused such a dramatic market reaction, especially in corn, up 3%, over 3% today.
It was impressive. There's no doubt about it.
It was. Now, I think what's most significant is that we have been approaching, coming into today, we were really approaching the cost of production in corn, soybeans, and wheat. And so to see a move like this, that dramatic on really a tiny downward adjustment on supply might not be so surprising, given that, corn is probably going to face some limited downside here. I saw a Morgan Stanley press release. I don't know if we're allowed to name names, but it was on Bloomberg.
You can, absolutely, yeah.
I read it on Bloomberg, and they basically said that at $3.20 a bushel, go all in on corn. And there's a very interesting seasonal, it's called the harvest seasonal. And quite simply, China and the United States are the two largest growers of corn in the world. They harvest their corn at the same time. They're in the same northern hemisphere. We don't have a choice. We harvest our corn before winter comes. And you get this influx of supply, and often, not always, but often, you get a cyclical price low come around harvest time, and that's basically mid-September through mid-December.
Which would make sense, right? I mean, I guess if I was a farmer, whoever could get the fruit off the tree or the corn off the stalk first, you're going to get the best price, and then after that, it's a little bit tougher, right?
It's true, and farmers have an increasing ability every year to store corn, so they don't just harvest it and sell it all in.
Yes.
But some do. They don't have a place to store it. It depends on the weather. You get enormous supply. Buyers tend to get a little bit relaxed. That wow, I see enough corn. I think I'll wait to price it, and so you tend to get this cyclical price low in good years when there's adequate supply, like this year. One interesting thing to note is that if you look back at the numbers since 1960. Looking at world figures of metric tons per hectare, so the yield of corn, you have a decline in yields on average every 3.1 years. And, we're going to have a yield decline this year, it looks like, if the United States yield decline ripples through the world, and it generally does. And this will be 2 years. We've come out of 2 years of rising yields. Now we'll have a little dip. And that's normal. That is normal. But as we've spoken about, the demand stays pretty steady. No matter what happens, people will continue to eat and use grains. They will continue to feed their animals. In fact, Monday of the crash, whatever date that was, a couple of Mondays ago,
the 24th, yes,
down 1,000 points.
Right.
That day, both, I believe, the corn fund and the wheat fund were up. Where everything else, people were panicking. But it just goes to show you, and that's not always going to happen, but no matter what the financial markets do, people and their animals are going to continue eating and using grains.
Well, I mean, my whole deal, even the books that I've written is about, wide price spread, accelerated volume. And so this morning I'm watching the corn fund. I'm saying to myself, oh man, this is impressive. And I my own head went to kind of where you're going in the marketplace. It says, this is interesting. The grains have got hurt for so long, and we know commodities just cycle. Too much commodity, you get oversupply, then it goes down the other end. It's only going to go to production because then you won't have it.
That's right. And, we kind of have a lot of things coming together right now. We do have the harvest seasonal. We're just entering the beginning of it. As I said earlier, corn was down right near its cost of production. I took a survey, an informal survey of all the corn economists that I know personally.
Okay.
And roughly, there's a very wide range, but most people think the cost of production of corn is between $3 and $4, with the consensus probably lying right about in the middle, $3.50 to $3.60 a bushel. So, as prices were down in the 360s just yesterday, we're looking at being very near cost of production, which means you probably have a more limited downside than, say, the upside statistically. Yes. And when you put that together with increasing demand, with a seasonal low, and with a yield, decline this year, and then you pretty much you got the reaction today. You had a very slight downward revision in supplies and a 3% move upward in corn. That's a big move.
And if you're watching Target TV, folks, you'll see I have the con fund up. I also have the actual contract up, and the contract was up almost 13 pennies. Which is huge, on monster volume. We were talking about before about the opening and closing of the pits themselves. So right up to of course you can do it all day at NYSE, but right up to 120, it wouldn't matter, how much you're buying or selling, right?
That's correct. 1:20 Central Time, 2:20 Eastern, and you have basically, a couple of minutes after that.
But sure.
The best time to transact. Central Time is 9:30 to 1:30. Eastern Time is 10:30 to 2:30. That's when the futures pits are open and very active, and that's when the market makers who actually price these ETFs are making you the most efficient price. So as an investor, you can come in, and on a day like today, I didn't calculate the notional value of corn, but it's many, many billions of dollars. So you can really come in. There's a lot of liquidity, very deep liquidity in these ETFs if you execute cautiously. Never use a market order, I think.
No doubt. Well, listen, thank you so much. We appreciate you coming on. Give us that update, and we look forward to having you again.
As am I. Thanks, Tom.
Thanks, Sal. Have a great weekend. Safe weekend. You stay right there, folks. We're going to be coming right back. Market-wise, what we have out here, you have the Dow right now is up 52. NASDAQ is up 12. S&Ps are up 4.5. We're going to be right back.